All right, hello everyone. Welcome to today's top five. Going to look at five interesting charts. Maybe they're not the ultimate top five, but they're enough to give you some insight into what's going on with the market. So first, we're going to look at Apple, right? You kind of always need to look at Apple. Why? Because by market cap, Apple is the biggest stock in the market. It's about 7% of the S&P 500. The S&P 500, there's 500 stocks, hence the name. This one particular stock occupies a lot of territory. It's the largest by market cap. So it kind of makes sense that we look at it. Now, this is really, I think that this is really going to be an important thing going forward over the next week or two to just watch what happens with Apple. Notice how we have this resistance level around 155. Resistance is a level where there's a lot of supply, right? When a market's moving higher, there's not a lot of supply or enough supply or sell orders to fill all of the demand or buy orders like we see here, like we see here. So this is a resistance level. Now, it looks like Apple might have gotten above it. And this tells us something. The fact that we could trade above it tells us that the investors who created the resistance with their sell orders or their supply might be out of the way. But sometimes with an important stock like Apple, it takes a few days to really know, right? So I don't think the jury is out yet. And of course, tomorrow we got Powell's testimony, and pretty much the street is all waiting to see, like, oh, is he going to raise rates 25 basis points? Is he not going to raise rates? In my opinion, I think it's irrelevant. I think that the market is going to go lower. I think that this whole banking thing is really just going to start to unwind. I think the fact that the Fed has raised rates so much is eventually going to catch up. I think that the Powell, the Fed, and Yellen at the Treasury are pretty much incompetent, and they don't really know what they're doing. So I have no confidence. But all that being said, what we need to do as traders is to let the market tell us what to do. None of us is going to be right all the time. The best traders only right part of the time. The market is never wrong. The market is always right. So we have to let the market tell us what to do. So if over the next few days it looks like this 155 level turns into support, that sets the stage for the next move higher. Now, why would a level that was resistance convert into support? This happens because we have seller's remorse. There are people who sold here and sold here. When the price is higher, now they're like, damn, I shouldn't have sold. So I made a mistake. I want to buy my shares back, but I'm only going to do so if I can get them for the same price I sold them at. So seller's remorse turning resistance into support is a characteristic of a bullish market. If this resistance doesn't convert into support, and has over the last 3 days, but like I said, the jury's still out, then that's a characteristic of a rally coming to an end. So we really need to focus on this 155 level. So please make sure you check back, because I go through this stuff every day. And please make sure you subscribe for stockmarketjobber.com on our YouTube page. Check out our website. All right, so we're on chart one here. I got four more. So again, just to reiterate, let's just watch this 155 level. All right, you don't need to be a market guru to see that this level is important. It was resistance here in October. It was resistance here in January and February. Maybe it's broken through. The jury is still out. We got to wait. Okay, let's move on to our next chart here. Now, Microsoft is another important stock to watch. This is the second biggest stock in the market after Apple. Apple and Microsoft together are 1/8 of this S&P 500. They're 12% of it. So we have 500 stocks, and two of them just really dominate. Now, this could be what we call a false breakout here, right? We got to resistance here, went lower. Now, why would someone go lower after it gets to resistance? Well, what is resistance? It's a bunch of investors who are trying to sell their shares at or around the same price. When we get to a level where we stop going up, some of these investors start to notice that there are other sellers around. That's why the price didn't go much higher or any higher. So they start to get worried, and they start to think, oh boy, I better reduce my price that I want to sell out, because if someone is willing to sell at a lower level than me, the buyers are going to go to them. So the sellers start to kind of freak out and they undercut each other and we get the snowball effect. Here we got up to the resistance. We looks like we got through, but the last 2 days action is kind of negative, right? We're back below it. What is a false breakout? Well, a lot of times false breakouts are caused by what we call buy stop orders. A lot of traders think that if we break a resistance level, we're going to keep going higher. Because if you break the resistance level, meaning if you trade above it, it could be an indication that the sellers are gone. They're out of the way. They finished their orders. They completed their orders, or or they cancel their orders. So sometimes some traders put what we call a buy stop order above the resistance. This means it's an order placed above the market. Generally, people place buy orders below where the stock is trading. But in this case, they place the buy order above it. Now, you might say, hey, Mark, why the hell would someone buy it at a higher level than it's trading at? Well, the idea is that if the resistance breaks and the sellers are out of the way, we're going to keep going higher. So they place these orders that get executed when the stock or the price gets to them. So this level here is 275. Someone might say, okay, you know what? I want to buy it, but I'm not going to buy it until it gets to 277 or 278. If it gets there, it will be an indication that the sellers who created the resistance are gone. You take supply out of the market, sets the stage for the price to go higher. If there's no follow through and all we have is buy stop orders, we get a reversal. And this is what we call a false breakout. And a false breakout in and of itself generally are good contrary indicators, meaning that if we get a false breakout, we tend to go down. We can see it right here, right? It looked like we were breaking out. Turns out it was a false breakout. And what happens? We get this big move lower. So we got to see if Apple holds that level, if this is a false breakout, if Apple doesn't hold, if Microsoft starts to go lower, we could see a new downtrend forming. Of course, a lot of it has to do with what Powell says tomorrow, but yada, 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 whatever, man. I'm kind of sick of hearing about this guy. I think it's better just to let the markets tell us what to do. So don't worry about what Powell says. Worry about what's going on with Apple. Worry about what's going on with Microsoft. These two stocks, which again consist of an eighth of the market, are going to give much better signals as to what's going on than the pundits on some chat room or on CNBC or Chairman Powell. Okay, let's move on to the next chart here. So all we've heard about is the banking, and it's kind of important, but I want to just point out here, one of the things that we always talk about at Stock Market Jobber is that some price levels are more important than others. Now, despite all the chaos, despite all the panic, despite all the punditry, where did the ETF that tracks the banking industry find support? Oh, gee, at a level that was important 3 years ago. Levels that are important can retain their importance for a long time, longer than you would even think. Okay, in this case, it's 3 years. It's not a coincidence that the bank ETF, and this is an ETF that tracks the bank sector, found support right around the 35 level. Why is it 35 or 34 or 36? I mean, I don't really know. But back here, I do know in 2020, the $35 level was significant resistance for this. It was like for 6 months. So there are investors who sold, who tell themselves, I made a mistake. I want to buy my shares back, but I'm only going to do so if I can get them for the same price I sold them at. And if we have enough remorseful sellers placing their buy orders at the level that was resistance, the level that was resistance can convert into support. So this is another thing to watch. So we got Microsoft, we got Apple, we got the banking sector. The signals are going to be pretty clear over the next few days where this market is going. So please make sure you check back. All right, let's go on to our next thing here. Now, this is kind of important too. Here we see the Treasury bond, the 10-year Treasury bond. You might notice that this scale is inverted, right? Instead of it going up or from low to high, it's going from low to high this way, all right? Now, why is this? Well, it's hard to get a chart of a bond. Bond traders generally look at charts of interest rates. But just to make things simple, I took the interest rate chart and I inverted it. Notice how this is 4%, This is 2%. A lot of money went flowing into these bonds as the flight to safety. People are freaking out. They sell their bank stocks. They're like, whoa, what's safe? Bonds. So they start buying bonds. But we got overbought. We got some really aggressive buying. And this could kind of just start to unwind. And if the bonds start to go lower, that means that interest rates are going higher. So, to re-summarize again, Microsoft, Apple potentially reversing. The banking sector could be testing support. It could go lower. If this flight to safety starts to give way, there's a good chance the market makes a pretty significant move lower. And then make sure you check back with us at Stock Market Jobber, because there are ways to make money when the market goes down. And you don't need to be an option trader. You don't need to be a futures trader. We love to talk about inverse ETFs. In other words, ETFs that go up when the market goes down. These days, with all these ETFs, you can pretty much get exposure to anything. When I started doing this 25 or 30 years ago, ETFs didn't even exist. But these ETFs have made things much easier for traders. So once again, if this whole flight to safety starts to unwind, if those two tech stocks, Apple and Microsoft, start to come in, if the banking industry ETF starts to break down, I mean, it's not going to be good, but there's going to be a chance to make some money, right? I mean, you could just start talking about things that go up when the market goes down. So make sure you check back. All right, let's go to our last chart of the day, today's top 5. It's Ford Motor. Now, if the market holds up and starts to rally, if the market likes what Powell has to say tomorrow, there's a good chance that there's a trade to be made here. Now, 1105 has been clear support, right? Market's going down, not enough demand to absorb the supply. We get to the support level, all of a sudden there's a lot of buyers here, here, here. One of the principles of financial markets is that oversold markets that get to support tend to bounce. What is support? It's a large group of investors who are trying to buy shares at or close to the same price. In this case, it's 1105. Market's going lower, not enough demand, not enough buyers. We get to support, it changes. What is oversold? Well, most of the time, a stock or a market or an ETF or a crypto or whatever it is you're looking at is trading within their historical or typical trading range. When we get below that, we call that oversold. This indicator down here, all right, is something that measures momentum. In other words, it measures if whatever we're looking at is below that important range. If it is, it's called oversold. This is important because it draws buyers into the market because they're going to be anticipating a reversion to the mean. A lot of trading strategies on Wall Street are based on reversion to the mean. So again, it's a principle of financial markets. Things that are oversold that get to support tend to rebound. Oversold conditions, notice this here, right? Oversold, time to buy. Oversold, time to buy. Oversold, time to buy. So these oversold conditions attract buyers into the market because they're going to be expecting a reversion to the mean. Support is a large level, or a level where there's a large amount of investors who are interested in buying. So it could be the whole double whammy. You got something that's oversold, it's at support, there's a good chance it bounces. So please make sure you check in, and please make sure you sign up for our YouTube page, because the marketing people keep telling me, well, whatever, I'm just telling myself. I want to teach people. I spent more than 20 years in the institutional investment industry. I see in the retail industry there's a lot of myths and misconceptions, and I want to just dispel them and teach people how to trade. All right, thank you, everybody. I will see you soon. Have a good day.